joined here by Adam Patti, CEO and co-founder of VistaShares, and of course, managing almost $800 million at this point. Things coming along super nicely there. You have a nice handful of ETFs out there, so I assume that you pay pretty close attention to the market on a daily basis. Wanted to pull you in and talk a little about this volatility that we've been seeing. And honestly, I think yesterday people were just like not even sure what was causing it. You've been on CNBC recently talking about some of these different markets. So let's get into it. What are your current insights on what's happening in the market?
I think we're in an inflection. Well, first of all, thanks for having me. I think we're in an inflection point in the market, right? We've been in a momentum-driven market that's been very narrow, really led by the mega cap tech and Mag 7 Plus. Those companies have been driving a lot of the returns over the last 6 months, but even going back a couple of years. So I think we might be in an inflection point, a change in market leadership, which, it happens. It always happens, right? I mean, momentum is just one of the factor tilts for the market, right? You've got value, you've got quality, you've got low volatility. So at some points in time, the markets shift to different types of companies that become the leaders in performance. And I think we might be in that type of stage right now. We'll have to see. But certainly, the volatility's there. And the sentiment is generally still bullish, but I think people are, have a lot of uncertainty. There's a lot of geopolitical risks going on, a lot of macro issues going on. The shutdown is starting to, grate on people's nerves, I think, a little bit and get people nervous. So, we'll have to wait and see. But, as always, just stay diversified, stick to your plan and, look for opportunities when there's drawdowns, and whatever you do, don't sell into a drawdown.
Definitely don't sell into a drawdown. I hear some of the fears and concerns. I actually think that maybe things are a little bit overblown. I mean, there's like those top 10 companies that are making up more than 30% now of the S&P 500. And so they're really carrying, and NVIDIA has pushed to 5 trillion. But a lot of these companies are saying like, hey, like we're still getting massive demand, right? NVIDIA is saying as much demand as we're seeing, it's probably only 25%, right? That we can even supply of this demand. So people want more and more. You've had a trade deal with China that's kind of been worked out here, at least pushed down the road another year. And for that reason, and, the market, I think, is operating very well from a technical perspective as well with, proper pullbacks, 21 SMA, other pieces like that. So I'm of the mindset that there's more bullishness here. We're in the age of automation, the age of AI, right? And that we're just going to continue seeing upward progress in this market. And if there are dips, like you said, not to sell into them, but rather to look for strategic opportunities for entries. And it's also especially, I think, a bit of an easier market if you're in the ETF game than the single stock.
Well, for sure, being diversified in a fund is a lot safer than just picking stocks, for sure, for most people, unless you're a professional and have a lot of time. But to your point about kind of the valuations and so forth, I mean, there's been a lot of news about the AI bubble, right? I mean, I totally disagree about the AI bubble because, look, the last bubble was the internet bubble, or the last big bubble, right? That people compare it to. The difference between now and then is that during the internet bubble, the companies were valued based on eyeballs. And I'm being a little flip, but eyeballs. How many people are coming to your website? How many? Now, there's real CapEx spending and there's real dollars flowing into these companies. And frankly, it's accelerating. It's not slowing down. So, I don't think there's an AI bubble. Can there be a pullback in certain names? Of course, there's always pullbacks. But again, to your point, buy the dips, don't sell into them.
Yeah, exactly. And also the earnings season has been pretty spectacular. For most of these companies across the board, right? The numbers have looked really good for people that want to look through. Like Robinhood will be an interesting one today that's coming out. And then obviously in a couple of weeks here, we'll have NVIDIA, and they're going to be the big one. NVIDIA already have some of those expectations, but, last quarter they went ahead and they put up, let's take a look at this revenue of 46.74 billion. And the estimate is insane. It's 54.7 billion. Look at that jump compared to the previous ones. So the analysts say we are accelerating, not decreasing.
Absolutely. And I see it. I mean, we see it from the CapEx spending into the picks and shovels plays, the companies that are building the data centers, the semiconductors. You look at the earnings. I mean, you look at AMD. I totally agree. I think earnings are strong. Interesting to see the pullback in some of the stocks, even when they outperform. But again, I think it's just a little bit of nervousness or skittishness on the part of some of these investors.
Yeah, AMD outperformed as well. And I know we're going to get to the POW ETF in a second, but a lot of these names, or even more so the picks and shovels of these names, can be found inside of AIS, which has really been outperforming. So I wanted to touch on that first, because that's, to me, probably one of the best ways to trade or invest really just long term in this thematic that we're seeing, which is this age of automation, right? And so age of automation, you can go for an NVIDIA and pieces like that. And obviously there's a lot of great pieces to them. But if you want to get into those picks and shovels plays, you're seeing a lot more of those in something like AIS here, which, we talked about it since it launched. And then, since the bottom right here at $17, it's up over 125%, recently even up as much as 140%. You had that drawdown day. I actually really enjoyed. I think that the drawdown that we saw the other day, always in retrospect, of course, but these things, they come right back to the 21 SMA. And now, you can see this happen multiple times, 21, 21, 21, boom, up. And that's what I'm looking for here, right? I move back off that 21 SMA. Worst case to 50 with some of those pieces, but looking pretty great here. And you had all-time highs on this yesterday. So to me, this is really a strong way to play this industry. And also, it just brings a lot less risk necessarily than, maybe is somebody's favorite, play here. What was some of the most popular AI plays that you've been seeing from single stock that are not inside of AIS?
Oh, well, I mean, most of them are not inside AIS, right? I mean, we've got NVIDIA because they're part of the supply chain. But, again, most investors are just playing the Metas, the Amazons, the Microsofts as AI plays, when in reality, those hyperscalers are the ones that are deploying the CapEx. What AIS is doing is focusing on where the CapEx are going. Right. So, yeah, I mean, you want to focus on where the money's going. So it's like 25 AI ETFs out there. And the problem in the ETF industry is that there's a lot of issues with what a product is labeled versus what's in the portfolio. So if you look under the hood of most of these AI ETFs out there, it's basically the Mag 7. Then they throw in some, Tencent, maybe some Alibaba, you get some Salesforce and, stuff like that. And there's your AI play, but it's not. That's not an AI play. So, what we focus is on, we mentioned the picks and shovels. We analyze the supply chain. We're looking at trying to determine, who are the companies that are soaking up all these hundreds and hundreds of billions of dollars being deployed by the hyperscalers. And those are companies that, frankly, are not on the radar of most investors. I mean, most investors don't know that 30% of the cost of an AI data center actually goes into cooling systems. Boring cooling systems. Who's the leader in cooling? Vertiv, DRKY. Right. So, those are the types of plays that we're looking for the fiber optic cable provider like Corning. We're going after the networking equipment. We're going after the racking systems. Those are the types of companies that we have that most people do not have. So the overlap between our AI ETF, which is the AI infrastructure, focusing on data centers and semiconductors, but the overlap between us and any other AI ETF out there is going to be minimal. And certainly our overlap with the Qs and the S&P 500 is going to be minimal, where most of these AI ETFs or ETFs that call themselves the AI ETFs actually have massive overlap with the big indexes.
Yeah, no, you're absolutely correct. And this is why AIS recently hit right around that 100 million AUM mark. And on daily today, it's having a great day. People can look here as well. The top holdings. I don't know how many times I've told people that they probably can't get exposure to SK Hynix separately, but here they can have, pretty sizable exposure to it. And then every time that I go and look at SK Hynix, it's crazy. The last month alone, it's up another 35%. Last 6 months, it's up 200%, right? It literally just keeps going. I mean, this was basically the move the last 2 days where you had like a 5% drawdown. But if you just look at it over this time period, especially since, really AIS came out, it's had a huge run of a couple 100%. Similarly, some of the other names, so you mentioned Vertiv, right? And you're like, hey, this is a major player, right, in these areas. That's had a massive run. It went from 53 almost to 200. So that one's up more than 200% during that time period. So you've caught a lot of the move. I know one other one that I think was moving around a little bit more lately was MU, right? That's basically hitting, I don't know if it's all-time highs today. This stock's been around for a long time. But yeah, it looks like all-time highs basically, right?
Yeah. I mean, these are the companies that are the key players in the supply chain. I'll throw another one in there also, a Taiwan Semiconductor, right? I mean, it's one of my favorite stocks on an individual basis. And without Taiwan Semiconductor, there is no AI, because they are the foundry that is actually building the chips for AMD, for NVIDIA, for Apple. So without them, there's no NVIDIA. which is
Yeah.
interesting. So, and those are the types of plays, that's the research that goes in and try to determine, how do you create a portfolio that to give investors exposure to companies they may not have exposure to, and get the companies that are actually soaking up all this CapEx that is being flowing into the market. And it's going to be flowing for years. As I think, Evan had a really good chart up the other day of the acceleration in CapEx spending just among the top hyperscalers, and it was like a massive growth rate over the next 5 years.
Yeah, it's insane, and they're just continuing to put more money towards it. It's going to ramp up as well. We're actually Wolf is partnering with ARK Invest, ARK Invest, Kathy Wood's firm, and we're basically going to be the editors and distributors for their podcast. And just this podcast, they did a whole segment talking about this exactly, saying, hey, we're just going to see CapEx continuing to ramp up. You have OpenAI wanted to do a $1 trillion IPO, right, in this area. Like, that's not happening without a ton of spending that's going to continue to come from all the major players. So I agree. So yeah, just a lot of great names to look through here. Great area for inspiration. And then, of course, this is coming from a great leadership team, right, where you have people like John McNeil and Sunny Madra and Robert Whitelaw and yourself being able to give all these insights and help to, create this, right, and go in and actually say, wow, like, where is the money coming from and flowing? So yeah, guys have done a great job of following the money, and that's worked out well. So congrats on the success of AIS. I assume, it's been a crazy year in the market, but being up 66%, do you look at where it kind of ranks among the top performing ETFs of the year?
Oh, it's number one.
Is it?
Yeah, as of today, I don't know, maybe something else flipped or something.
Probably number one without leverage would be my guess.
Oh, without leverage, of course. Yeah, no, I'm just talking about the AI category. That's the long only equity ETFs.
Okay. Okay, got it. In the AI category, for sure, that makes sense.
Oh yeah.
Because I know there's some stuff like the freaking gold miners ETFs and stuff.
Oh yeah, forget that. That's whole different animal. But yeah, the AI ETFs it's the top performer. It's been the top performer for the last 6 months, I think, or one of the top performers for sure. But again, it's no surprise because we're focusing on the companies that are making the money. We're not focusing on the potential advantage or the possible revenue generation of an AI application down the road. Now, down the road, if those start making money, we can add those to the product as well, and that's why we have that active flexibility. But right now, it's about data center builders and semiconductor builders.
Yeah, absolutely. Is there an NBIS inside there?
No.
Is there a reason for that?
It's on our watch list. It wasn't in there. It's on it. We have a watch list of a variety of companies that we're looking at. Could be something we bring in, but not right now.
Got it. All right, let's rotate a little bit. So the picks and shovels plays, obviously, it works incredibly well, and it's a great way to have long-term exposure because as a thematic starts to heat up, the picks and shovel plays become more entrenched, right? You can also kind of sort out what's working, what's not working pretty fast, more so than the companies that are just spending money to those picks and shovels plays. And so with that being said, you guys introduced this Supercycle ETF, right, in the Electrification Supercycle, which to me goes hand in hand with AI. Is that correct?
It's a bookend so the ticker is POW, POW. It's a bookend to AIS. So if you think about AIS is about the AI intelligence infrastructure, right? It's the data centers, the semiconductors, building that intelligence layer. But the gating factor to AI being successful is power, which is interesting. So, and there's been a lot said about it. And, but the key is that, you need to have the power to power these AI data centers. And the fact of the matter is that the grid in the United States and frankly around the world in most places is over 40 years old and hasn't been updated and needs a tremendous amount of investment just to satiate the demands of consumers. I mean, look what's going on in California with the constant brownouts during the summer because the air conditioning's on and the electric cars are plugged in. So forget even AI data centers. It's really just upgrading this entire infrastructure. Then you throw in the AI data centers and we need a massive influx of power. And I'm using the word power, not necessarily energy, because we don't have an energy problem, we have a power problem. And the difference there is that, we can generate energy. We have the generation facilities to do that. We don't have the facilities to to distribute that energy or turn it into power and distribute it to the end consumer, that, whether that's an AI data center or an actual person. And that's where the bottleneck is. It's the transmission and the distribution. And that's where the CapEx is going. And that's where we're focused.
Yeah, that's awesome. I appreciate the breakdown there of the thesis. This is some interesting context inside of here. So I actually was hoping maybe I could ask you to make another chart. So this one is GDP per capita and consumption per capita. Is there a way to basically also make a chart that is GDP per capita and energy production per capita? Because I feel like that's where China is ahead of the US, and this is an area where US is ahead of China.
That's interesting. I'm taking a note. Production per capita. Yeah.
Because that's the case right now, why people are saying like the US is falling behind. Like we have to push forward. And that's why so many people want to push all types of energy production, whether it's nuclear, solar, right, whatever it is, to get in there, because it's not sustainable right now on just burning fossil fuels to try to get ahead in this race.
It certainly isn't. And China has been certainly a leader in some of those non-traditional energy production or generation sources. So I agreed. I mean, they're pushing hard on solar. They've got hydroelectric. They've got a lot going on over there that we're just way behind. I mean, we're way behind in a lot of areas, but certainly that's a really critical piece. And that's a national security risk for a variety of reasons. So we need to step up our game. So yeah, I mean, the micronuclear is another thing that needs to be developed and pushed here in the United States as well. And we're on our way, but we're still probably 5 years, 8 years, maybe even 10 years away from that, based on where the regulations are.
Yeah, somebody really good to look at for this stuff is Stock Talk Weekly. I just went to his page and just typed in energy. This was a headline from back on the 21st talking about the U.S. offering nuclear grade weapon plutonium to essentially convert to advanced nuclear fuel to accelerate supply chain independence, right? Like this right here seems to me like the type of move that you make when you're like, all right, we have to get ahead. It's kind of like the hit the boost button, the red button that you don't exactly know what it's going to do, but you need it, that you're falling behind, right?
Yeah, I mean, hopefully we can move it forward. I mean, but it seems that every time the administration tries to accelerate something, they're getting thrown. They're getting sued by 26 states, and it goes to the Supreme Court. And that's a political issue. Obviously, we don't need to get into it, but we've got to cut through the red tape. There's got to be a lot more ability for the United States to take our innovation, where we do lead, and transform that into progress. So it's we got to get through the regulations.
Yeah, so it's a great area to invest in, obviously, because everybody realizes that there's a necessity for it and they're pushing it forward, but people don't know exactly which names to invest in, which is where I think that this ETF really comes into play and has its ability to shine. Now, the ETF it's been out for a relatively short period of time, maybe about a week, right? Is that correct?
Yeah, brand new product, but built on a methodology that's been proven with AIS for a long time. It's our bill of materials process that we've patented, or we filed a patent on, to really analyze the supply chain and create that picks and shovels type portfolio.
Yeah, it's super interesting. The holdings are able to be found here. So we played a game in the past with Evan where it was, does Gov know this holding? And I'll tell you, I am knowing less of them as we're going into deep picks and shovels plays in electricity. So this is, to me, exciting because I'm learning. Now, obviously, there's a cash holding within here. Is there a reason that the cash is at 9.42?
You know what? That's a temporary cash holding. That'll be reduced. When we launched the product, there was a lack of availability of some of the securities due to having accounts opened by the administrator. So we had to buy some ADRs and flip back into the local. So that'll disappear.
Cool. So for the rest of these, very lightly familiar with Hubble. It's not something that I could say, I'm an expert in or really have deep knowledge inside of. Hubble's been an interesting stock as well, just for people that want to kind of see what the performance is like. You had a really massive run post-COVID. I can pull out a weekly chart here to make this a little easier for people to see. I mean, this stock has just gone, right? Like for a long time. Maybe I'll even pull out to a monthly for a second. So this is what the monthly looks like from all the data that I have back to 1999. Dropped down initially to the 22 range, came back there in 2009, and then you did have a bit of a drawdown here in March, but then since then, just an absolute run on the stock. So let's pull back to the weekly for a second here. So people can see this is 2020. This is where we are now. This is the dip that we had in April. Even since the dip in April, you've moved from 300 to 473. You're almost up about 150%, I suppose. I guess a little bit over 150% just in that time, right? Since here to here. Oh, sorry, 50%. I don't know why I'm saying 150. About 50%. And you're now looking really good because you're coming back up to the highs of 2024, which is always what you like to see. You know, you push through those highs. Example right here, right? Dip, highs, boom, right? Move like that. And so that's what I'd expect something that looks like this in a strong industry to do right now. But for those unfamiliar with this, like, can you tell me a little bit more about just what the stock does and why it's the largest holding?
Yeah, I mean, it's a power infrastructure. They're a leader in power infrastructure, energy products for transmission and distribution of energy. So, they create a lot of really boring products that most people, just simply would never even think about, that are fitting into the transformers on the power lines and things like that, or sitting in a building where it's switching equipment and things like that to get the energy transformed into power and then distributed out into the grid. So, just a company that most people probably don't own, never heard of. I'll call out a couple others that are really interesting. One of our favorites is Persimmon. It's an Italian company. Actually, you know what? It just fell out of our top 10. It's ticker PRY. It's an Italian company. I don't know if you'll be able to pull it up, but they're a leader in cable solutions. So again, for energy and power transmission, they're focusing on getting that power from the generation facility to the local environment where then it can be distributed.
What was the ticker again?
PRY.
PRY, like pry?
Yep.
PRY. So they are, where are they listed?
Italy.
Italy. Got it. So that's why I am not seeing it on there. Let's see if I can pull it up on here. Persimmon Spa?
Yes, that's them.
Okay, interesting. Yeah. So this one right here. This is the weekly.
Yeah.
Go back to the daily a little bit here. Here's a daily.
What date is that of the peak drawdown?
So it's up 140% from there. This one right here, this is the lows. This is April 8th from the tariffs.
Yeah. Okay.
And then that right there is basically going into this week. And then that's the drawdown day that we just had. And it looks like it's working really well in the technical perspective. Just what I look on for the technicals, just for those that are kind of like curious with these pieces, I really look at two lines mainly. I look at the pink line, which is the 21-day SMA, and I look at the red line, which is the 50-day. If we get a little lower, the green line is kind of your end all be all. It's a 200. And so as you're watching these, you want to always look for retraces to the pink, and then your red is your guardrail. So you can see right here, it basically did it the whole way up. So you came back through here, you came above the 21-day SMA, and then it respected it right here, had the 1 day below it, came back up above, hit it again right here, hit it again right here, and then now you've had an actual break of it, and that's where your 50-day comes into play. So as long as it holds above the 50-day, you're pretty good. The worst thing that can happen typically is you have a break below the 50-day. So let's say here, you come back up and you retest the 50-day, and then you fail, and that's when usually you go to the green line, which is the 200. So it's just something to look out for in those areas. One thing that is going against it is that this is a really just seasonality in November is typically not good for this, is what it seems. Maybe it's because of earnings at this time of the year or whatever it can be. And we could go even a little bit farther back. I just don't like to have COVID inside of it necessarily. Yeah. But even if we went back, like you can see like all the rest of the months are really good. So if you do get through November, you're looking to have a positive December. I mean, it's the best month for it, or tied, basically 60 to 67%, right around there with seasonality. So I would just look at this from a technical perspective. But the beauty is with what you're doing is that you're looking for long-term holds, right, inside of these, and you're looking for things that have strong fundamentals as well. And when you're finding companies like this, which are overseas, like people might not know about, but I'll share this for a second. I just like to use Seeking Alpha when I'm looking at these things. There are some analysts that are covering it, and they do have it as a strong, as a buy right now, rated, and they've had it at strong buy at certain points, and they still have it as a buy right now. And you've got basically two analysts that are covering it that have it as a buy right now. So some things to just continue to cover. But yeah, a couple of buy ratings, and then you can see these are all from Seeking Alpha analysts as well in the past. So yeah, pretty interesting one to me. I'd probably have to dig a little bit deeper in because there's it's just Italian. They probably have less financials, but it certainly looks like they make a lot of money from what I'm seeing.
Yeah, I mean, they're a key player. They're the leader in what they do. And if we are going to be building out the grid and upgrading it, they are indispensable within that process. So, again, the CapEx is flowing. Where is it flowing to? They are a player. Another one I'll throw out there is Delta. I think it's this is the German. I think this one is on the German exchange, DLS. It's a Taiwanese company.
Yeah, I'll go to that in 1 second. I was just looking through just a really nice looking financials, by the way, on PRY. I hadn't really dug into them beforehand, but I mean they're healthy right now from everything that I can see on the income statement in all the areas. All right, Pink Limited Info. What was that one? It was Delta.
Yeah, Delta. It's a Taiwanese company. I think the one we have is out of Germany, DLS.
DLS.
Yeah, where it's listed.
That is not that one. So it's going to be like DLS. Okay. I might not have that one necessarily, but that's fine. That's actually kind of the beauty of some of this is that you guys are picking up tickers that, to be honest, are very difficult for people to get direct exposure to with some of these pieces. So I see it's DLSGR, right? Delta Electronics Thailand PLC.
Yes.
One thing that I have found that has worked for me often is, here we go. Yeah. If I can't find it on those other areas, Perplexity Finance has been able to actually find it and give me a decent looking chart on some of these things. So yeah,
this is a dominant player in switching systems. Again, I mean, you can't upgrade the grid without upgraded switching systems, and these guys are the leader in that space.
Can you talk a little bit more about that, like what a switching system is and upgrading a grid and those pieces?
Yeah, I mean, look, the power is generated. It is then stored, and it then is going into another facility where it is then transmitted out over long distances to local communities, where it's then distributed to individual homes or facilities, right? So an AI data center, for instance. So the switching systems are a critical piece, both where the energy is then transmitted out, and then again where it's then it gets to the community it needs to be in, and it needs to be distributed out the last mile. So those switching facilities, those switches are a critical piece, and it's and these guys are the dominant player in that space.
Can you walk through one more time like how you found this company? Because I mean I've never heard of it, but I'm looking at these details right here, and I guess I got to do you know the conversion of USD to baht?
Off the top of my head, I do not.
So those numbers in dollars. This is why I like AI, right? It gives me something, and it's like trying to be helpful and give it to me in their native currency. And it's like, here they had these increases and stuff, and I'm just like, all right, well, I just need it, in USD. So here we go, perfect. Now I can see exactly. So sales revenue, wow, they did over $1 billion in revenue, and they had really nice net profit here of $228 million. I mean, if you can do profit of a couple $100 million, you're definitely not a failing company.
Yeah. So again, how do we choose these companies? Everything we do, just like AIS, it's the same exact process as AIS. We're active to a rules-based process. So what we do here is we're analyzing the supply chain, and in the supply chain for POW. So AIS is data centers and semiconductors. Here it's power generation, transmission, and distribution. And we're analyzing those supply chains. We layer on the bill of materials to see how much of the actual CapEx dollars go into each segment of the supply chain. Then we find the companies that play in each segment. Then we're analyzing those companies to see how much of their revenue is coming directly from the segment and the supply chain. And that's how our core portfolio is rolled up. So Delta is, we didn't just pick a stock. It's picked because the rules-based process, because they're an important player in, power, distribution and transmission. And that's why they're in there at such a high level, because they're a critical piece. Then, of course, we do have our active management, layer sitting on top of that, which is comprised of, a world-class investment committee. You mentioned for AIS, we've got John McNeil, former president of Tesla. We've got Sunny Madra, the president and chief operating officer of Grok, Professor Robert Whitelaw, former dean of NYU Stern School of Business, and then myself. So for POW, we kept that same investment committee together because energy is something that both John and Sunny are experts on as well, because they're out building data centers, they're AI gurus. But then we added Justin Lopas. Justin was one of the top engineers at SpaceX. He was the head of manufacturing over at Anduril. Now he's the co-founder and chief operating officer of a company called Base Power, which is a leader in energy technology solutions. So, we've got these experts. So the way we run this portfolio is, we have the core portfolio based on the methodology. That the methodology is right on our website. You can take a look at it. It's easy to find. But then we have the experts, the actual domain experts, who know the space, who know the players, who are doing this business every day. They're identifying risks and opportunities in the portfolio. And then once they have something a change they want to make in or out, then it goes over to my Professor Whitelaw and myself, where we're then, our job is to express their view into the portfolio.
Really interesting. Hey, I forgot to do this at the start. So just for everyone that is on with us, obviously we are talking ticker specific here. So real quick, just wanted to read a compliance voiceover. Investors, for everyone watching, please carefully consider each of these funds' investment objectives, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about the different VistaShares ETFs. To obtain the prospectus and summary prospectus, you can go right to this website, VistaShares.com, and it has it for each one of them right here, the prospectus and the summary prospectus specifically for the one that we're discussing right now. You can see that on the screen. You can download it easily. And your funds prospectus and summary prospectus should be read carefully prior to investing. So just wanted to put that out there. Read through a lot of the specific fund risk disclosures and some of those pieces here. And these are also distributed by Foresight. So just wanted to put that out there. Please do your due diligence, but hopefully this has been super helpful. To be honest, these are my favorite streams where I'm learning a ton, in stream as well, because I feel like that's probably the best case for the audience.
Yeah, and look, this is a new space for most people. It's brand new for me as well. I mean, I've been obviously involved in building the portfolio construction process and stuff like that. But, a lot of these names are new to me as well. And I've been learning about them because, again, I'm on the portfolio construction side. John, Justin, and Sunny are the ones that are, the domain experts in the names. But it's a critical area. And, people have been talking about the trillions or the hundreds of billions and trillions going into AI infrastructure. A similar amount of money will be going into the power infrastructure. Yeah. And that's really the critical piece right there. So again, follow the money. Who's going to be making the money? Those are the companies you want to buy.
Yeah, I like it. And to be honest, I like that you guys are staying on top of that research and looking into these companies. It's a quarterly rebalancing. Is that correct?
We rebalance the core portfolio using our bill of materials process twice a year. So it's June and December. But, the active overlay can, make changes any day. And now what we don't do is we don't wake up in the morning and say, oh, let's add this security, or this one's down 10%, let's add more. That's not what we do. We're looking for risks and opportunities. So, for instance, I'll use Delta. We just talked about Delta switching. If one day, Sunny gets wind that their technology is being usurped by somebody else, that is something that we have to keep an eye on, because that means that their pipeline might deteriorate and go somewhere else. So that's a risk or an opportunity. A new technology pops up that is, revolutionizing the switching industry with a company that's small or nobody knows about. We'll know about it. Why? Because, Justin, for instance, is out there building these facilities. He's involved with the industry. So we'll know about that and put it on a watch list and then decide whether to put it in the portfolio.
Very cool. I want to go through some more of these names, but real quick, we got a bit of breaking news from the Wolf account, of course. So I actually did a interview with Dan Ives on, I want to say Friday, and sat down on live stream with him. And I asked him a little bit about Apple, Google, and he said, to quote, he said, "It is a done deal that they are going to do a deal together. He said it is just purely a matter of time. And what do you know? 4 days later, 5 days later, Wednesday, breaking news: Apple finalizing deal to pay Google $1 billion annually to power Siri with Gemini AI, integrating Google's 1.2 trillion parameter model into iOS by 2026, which is coming up pretty fast. Partnership's a big shift. Apple's giving up, essentially, is what this all says. They've realized that they suck at creating AI. They're going to work with Google. I'm just curious if you see this affecting, any of the pieces in AIS, if they have exposure, if they benefit, just any general thoughts here.
Yeah, I don't think it impacts AIS. I mean, off the top of my head, the portfolio again is the companies, whoever's putting the money in to build the data centers, those companies are getting that money. But interesting, how is Apple stock doing now?
Yeah, so I'm looking it up right now. Google stock hasn't really moved. They had a nice move from this morning. Apple stock's doing okay. Nothing that I would say is special at the moment right here. The stock's up 0.36% on the day. Since the announcement came out, it's maybe moved up 1/3%. I do wonder if people were almost in the mindset. I mean, it's that high of day, and Apple's not too far off from all-time highs. But I do wonder if people were kind of in that Dan Ives mindset of done deal, that this is going to happen. He seemed incredibly sure of it.
Yeah, well, he's definitely in the loop. I'm a big fan of his. He's a good guy. Well, I mean, I would view it. I mean, when you mentioned it, I viewed it as maybe a negative for Apple, to be honest. I mean, they're going to give up their own development abilities, or maybe they won't. Maybe they'll do something in parallel. But they hitch their wagon with a company that they compete with on multiple.
Well, they already pay Google $20 billion a year to be the default search engine.
Yeah, but
what's an extra billion amongst friends?
Yeah, no, I agree. I mean, it's not the dollars; it's more the strategy. But again, who am I to opine on Apple strategy? But
how did Apple fall behind so badly in this race towards AI when they had like the first chatbot?
Yeah, which is terrible. I mean, have you ever tried using Siri?
I only use Siri to add reminders. That is all that I think it is capable of.
It's the worst. The worst. It frustrates me. I want to throw my phone against the wall whenever I try it. But yeah,
I think it was better when I was a kid. When I remember using Siri when I was like 12, and I was like, "This is cool. I can have a conversation."
Yeah, it was brand new. It was really cool back then. And then all of a sudden, you realize it can't do anything. But hey. It's interesting. So I'll have to read into it a little bit and see more about it. But so they're going to integrate Gemini throughout their ecosystem as their default AI LLM.
Yeah, Apple's falling behind in the race. The deal underscores big tech's, licensing companies. Gemini-powered Siri launches in 2026. I don't know if it'll be throughout the rest of it, but it'll rely on Google's AI infrastructure for core Siri features.
Their infrastructure. Okay.
Which is so funny. Apple, the whole sell of the iPhone 16, which has already been forgotten because it literally had nothing special. And then they just moved on to the 17, which also, by the way, just in case anyone's willing to buy it, nothing special.
Yeah.
The whole sell was AI. Yeah. iPhone 16 built for AI. And then they literally just came out a year later and said, you know what? We suck at AI. We're just going to partner with someone else. So crazy.
Yeah, it is crazy. I'm surprised, but hey. And you're right about the 17. I literally just got it yesterday because my 13 died, and I just literally got everything loaded up last night. So I'm still exploring, but it seems exactly the same.
It's a jump from the 13. I'll give them that. I have the 15 Pro. There's no difference. There was a jump from 13 to 14 because they moved to Dynamic Island. So there's an actual shift on what the screen looks like. Beyond there, there's no difference. From if you have a 15 Pro, it's also equipped for AI capabilities within all those pieces. But yeah. All right, let's rotate back to POW for a second. Also, I'm getting one of my workers knocking on my door. So I'm going to turn back to you for a second. Can you walk through a couple more of these holdings?
Sure. Well, GE Vernova is one of my favorite securities for sure. And we added this. This is the only overlap security between AIS and POW, actually, out of the entire portfolio. And the reason why it's important is that, many of these AI data centers have been, recognizing they need more power. So they've been building their own power generation facilities on the AI data center campus. And in doing that, they're realizing, okay, well, again, we have plenty of energy. Many of them use natural gas. So again, going back to that, we don't have an energy problem. We have a power problem. So they have plenty of energy, but what they don't have to build these facilities is turbines. GE Vernova is the leader in creating that infrastructure for these natural gas generation facilities. So very critical piece, both on the AI intelligence side, as well as on the kind of the power generation side. Very important.
Yeah, absolutely agree. All right, let's actually double back for a second to this document. So energy clearly is going to be a huge driving force here. We've talked a little bit about this piece right here. The U.S. electricity prices are already under pressure, which is an interesting one to me right here. So this is going to be in kilowatt hours. So I will tell you, I feel, a little bit equipped to actually talk about this. Not my first job, because I started a couple companies earlier on, but my freshman summer, I did door-to-door sales for gas and electric. And I became an expert on kilowatt per hour pricing in the Maryland area. And I really understood all these details. So funny enough, I actually do have some crossover for these companies. But can you outline for people a little bit on, what this sheet is showing, and then I'll give my insights?
Yeah, I mean, look, power prices are they're going up. I mean, it's just, we have too much demand and not enough generation capability, or not enough transmission and distribution, really. And that is the problem. And again, going back to California with their brownouts, they have some of the highest prices in the country, yet they cannot satiate the demand of just the consumers. Then, of course, if you add in all the electric cars on top of that, they're in big trouble. A lot of that's really consistent across the United States. But now, when you start throwing in AI data centers, which some of these data centers over the next few years will be equivalent to a full city of energy need. So it's like adding a new city in the middle of Tennessee, for instance, in terms of power generation needs. So prices are going up, and they are going to continue to go up as demand goes up, and that's a big problem. And it's pricing, it's harming the consumer, and so we need to upgrade this. We need to fix it.
So this is saying right now for California, is this 17.3 cents increase?
Yes, per kilowatt hours.
So this is saying kilowatt hours right now. It was 12.8 and now it's 17.3, or it's 12.8 plus 17.3?
12.8 plus 17.3.
That is actual insanity.
Yeah, it is. It's scary.
All right. So just for comparison for people, when I was doing this, now, obviously I was doing this, a while ago at this point. But still not that long ago. And our offer that we locked people in at, like our standard rate, was 8.88 cents per kilowatt. Kilowatt hour, which is lower than, literally everything over here. Obviously, some of these are lower. I was in Maryland for crossover, but this is saying that in Nevada, so all of these are already now higher. Even if you look at the lowest one right here, this is saying 6.6. They're now plus 3.9 cents, right? They're over 10. It's funny to me just because I would go around and I'd knock doors and I try to get people to give me their bill so I can see what they're paying, because the best way for me to sell someone is if I can guarantee that I can get you a better rate. If anybody was paying 10 cents, I always would be like, oh, do I have a deal for you? And now there's people paying, this is 30 cents per kilowatt hour. This is actual, this is like assault.
It is. And, average consumers can't afford it. And it's a scary situation. It's another national security risk from within. And it's very scary, and it's going to get worse. That's the problem. It's going to get a lot worse.
Yeah, absolutely. I agree. Interesting to see here states that embrace development experience lower energy costs in real dollars. So this is like taking on like nuclear facilities or solar, or what?
What are you pointing at?
Yeah, like Nevada, where it's showing this like states that embraced development.
Yes. Yeah, exactly. Well, solar, there, some of the states have been a little more progressive in looking for solutions than others. And some states have lower regulatory burdens than others. So, if you look at the states that are doing better, you can kind of point to those with lower regulatory issues and, that have been a little more progressive in other alternative fuels.
Yeah, I've got a bill right here, funny enough. since we're talking this stuff. Now I live in Puerto Rico, which you would think would be the worst, I assume, for you know, per kilowatt hour and everything like that. But even so, I mean, it's not terrible. I mean, most of mine, like, it's high, but at the max I pay 12 cents.
Okay.
But like, I thought that was bad. I was like, I'm in Puerto Rico. They've got nothing here. They've got the worst infrastructure, and I'm paying 12 cents per kilowatt hour. And these are saying that these are states that are paying more than that and just doubled. So yeah, I mean, I hate to harp on this, but there's a pandemic.
Yeah, I'm in Massachusetts. I mean, it's brutal. It's absolutely brutal.
Wow. Wow. Man,
Yeah.
I guess I didn't realize I was paying up to 12 cents. Tough scene. I always, man, I guess, well, for anyone that's wondering why it's taking me so long to read, the whole thing's in Spanish. So,
Yeah.
you know, I'm learning with some of these pieces, but yeah, costo promedio to 12 months. Maybe it's even higher than I'm thinking. Maybe it's even up to like 25 cents on some of these things. So that is pretty crazy with some of this stuff, but yeah, blows my mind.
Yep.
Wow.
Your video just
It just froze.
yeah, froze.
All right. Well, I'll see if I can get this back. You can still hear me fine?
Yes.
All right. I don't know why my camera's freezing. Well, you'll have to keep pulling with all the good looks.
Oh yeah.
I'll get this one done. All right. Crazy. Sorry to harp on that one, but let's take a look through here. Demand is set to skyrocket. So this is the important point, right? It's already bad, but demand is about to get crazier. So walk us through that.
Yeah, I mean, look, I mean, the left hand of the chart is historical, right? So we had enough generation to satiate consumption, with peaks and valleys, of course. But now, of course, if you go to the right, you see the drastic increase. And, you know, we're not going to be at the low end demand for sure. Well, we might be at the high end, but we'll probably be somewhere in the middle. And you could just see how, you know, consumption is going to outstrip generation. I mean, and we're not far away from that already. Whoop. I think we lost. Oh, I thought we lost you.
I wanted to get the camera back, so sorry. I just reloaded for a second. We're still live. Don't worry.
I was like looking. I was like, oh God.
No. I just want to make sure my camera. I want to make sure my camera was working. So that's all. That's all. You can keep going. You're good.
All right, perfect. Well, we lost the slide, but it's fine. But the bottom line is that, you know, we don't have enough power for consumers, and particularly not with the demands of AI.
Absolutely. Yeah, pretty crazy. So can you just put into scale for a second? Like, I mean, this shows historical energy consumption here, high-end demand scenario. So, I mean, AI is going to what? Double, triple, 10x, 100x the demand for energy?
Well, look, I mean, if you go from that dotted line, 2000, probably 23, right? I mean, it's consumption is at, call it 3750 electricity demand. And the high end is, you know, it's going up near 5,000. So it's, you know, it's almost a double in the high end.
It feels to me like it's going to go higher.
Yeah. I mean, I don't, you know, it could be.
Yeah. U.S. power demand from AI data centers, especially to boom. So here's what I guess I'm referring to right here. Data center demand. This is where you're going from 4 gigawatts to 123.
Yeah. Well, again, and, you know, 15 years ago, your average data center was quite small. Now the average data center is massive, with 10x the power needs. So, you know, you build a dozen of those, and, you know, you got a dozen new cities in the United States, basically.
Oh, absolutely. I don't know if people have seen these like photos and graphics of the different things. So I was looking at this. They have the 15 largest data centers in the world. This was by Brilio. And they were just basically showing like some of like the square footage. So in China, you have the biggest, and then second one was the Citadel. And they had just some different pieces, you know, the cost and some of those different things in the area and the power capacity. And this one, I mean, this is 668,000 square meters.
Jeez.
I mean, they have some pictures as well that I actually was going to pull up for people. Like, this is the largest data center in the world.
It's massive.
It's 10.7 million square feet.
That's insane. That's insane.
These things are cities.
Yeah,
they're like continents.
Crazy.
Yeah, I mean, they cost billions of dollars as well. This is the $3 billion data facility.
Yeah.
So yeah, absolutely. I think the honing in point here is, and why we're showing all the data is like, this is, as an investor, typically how you make like real investments and real money in my perspective. And again, not financial advice. I read the disclosures. Please read the prospectus on these things. But the best way in my eyes to invest is to see a trend coming and get in early on that trend based on clear data. So, many such cases of this, but of course, the internet, right? And recently some of these AI companies, and you've had huge catalysts in the past where it became clear that something was going to take over, and you were going to have, in the biggest driver of, upside in stocks is supply and demand. And we're showing you here, there is incredible amounts of demand, and demand that we see now, I mean, this is 2024, this is 2035. This is not 2015 to now. This is the future.
Yep.
And if you look at it, you have to understand, like, hey, we are going to see this is literally, I mean, 50 or whatever this is, a 25x, 31x demand growth right there. Well, all of these companies, right? Like, I was going to ask you a question earlier. I was going to be like, hey, is it a little scary that all the companies that are in this are up 150%?
Well, because go on.
Yeah. And I was going to say, like, no, because it's just a sign of what's coming.
Right. Go to the next slide, because there's 2 more slides. I know we're running out of time. I definitely want to get these in. This is what you were talking about, right? So no, it's not scary. This is what's going in. This is the capital that's going to need to be deployed. This is a comparison of what the hyperscalers are spending on AI data centers and semiconductors, and comparing it to what utilities or whomever is the proxy there is going to need to spend to upgrade our power capabilities. I mean, the numbers are astronomical.
Right.
So, and it's not quite the same, but it's similar in scale.
Yeah, 100%. It's crazy. And it trickles down all the way. You have massive CapEx from the bigger companies, but you're also going to just see consumers, in my opinion, consuming more energy than ever, right? Like, everybody's going to have their own home AI setup, right? It's going to basically be a souped up version of the computers we're on right now. It's going to take twice as much energy. Your bill is going to double. And guess what? You can invest and make all that money now to pay for it.
Absolutely. And if you quickly go to slide 12, and this is what we're talking about. So when you boil it all down, is okay, we see what the demand curve looks like. We see what the CapEx looks like. Where is that CapEx going? Because that dictates what companies you want to be invested in. So this breaks down the different segments of the kind of the ecosystem, the energy ecosystem. So everyone keeps talking about generation. Yeah, generation. Yes, it's important. People talk about renewables. Yeah, important. But where is all the money going in? It's going in that big box right in the middle. That's the transmission and distribution. That is the key. That's all, Delta, the Persimmons, the Hubbles, all the companies that are providing the picks and shovels to build out that infrastructure, that's in the transmission and distribution segment. That's where the money's going. That's where you want to follow and find the companies. And that's what POW, our ETF, focuses on.
Got it. So it's not the creation of energy, it's the utilization of it.
We have generation in there. We have a full scale across the ecosystem in the portfolio. So we've got it all represented, but it's represented in the correct proportions. So, if you look at our portfolio, we'll have around 50% plus in the transmission and distribution segment.
Yeah.
So the portfolio is designed to mirror where the CapEx is.
So this is a good topic. I think it's something we could talk a lot more about. We're going to move to wrap up here. Let's pick up on the next show discussing this difference between energy and power and breaking down these segments.
I love it.
Okay, perfect. I hope this was as helpful for everybody watching as it was for me today. I know we had a great audience that tuned in on Twitter. Appreciate everyone, as always, for tuning in. Final number for right now for those that tuned in. I see 5,800 have tuned in and watched on Twitter. Appreciate y'all tuning in and watching. Better day in the market today. I would certainly put this ETF on your radar. POW is the ticker. Go ahead, read the funds prospectus. If this can be the next AIS, you'll be excited that you found it early.